Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everyone. Welcome to episode 105 of Carson's Facts versus Feelings. Sonu, we're going to make everybody mad at us because we're going to talk about the election this week. We are three weeks away. It's called Let's Talk About the Election is what we've titled this.
Let's not
talk about the election is what we should say. We'll just wing it and talk about something else. I will talk about this. So I live in Cincinnati, walked outside. It's cold all of a sudden, like really cold. What's it like? I mean, you always talk about the weather, but it's cold, man. Yeah.
I came back from the outdoors. I just dropped my kids off to school, and here I am wearing like 3 layers. And I didn't even take it off because it's not like the house is that cold, but it just feels cold. Even if once you come in from the outside, I'm like, winter is here. That's all. What can you say?
Well, I know at least this part of Ohio, it's supposed to warm up a little this weekend, but no question about it. It is a little chilly now.
I'll be glad for some warming up because I will be in your neck of the woods.
Yeah, that's true. You're coming here. Is it 2 days? Wow.
2 days.
I don't even
We forgot about that.
I didn't forget. I thought it was next week, but next week we go to Omaha for a team meeting. So that's what it is. And speaking of next week, let the listeners know, because we said, should we tell them? Yes, we're going to tell them. Who do we have on the podcast next week? This is very exciting.
Wow. Yeah. No, we pumped for it. Josh Brown, co-founder, right?
We'll call him co-founder, CEO, Ritholtz Wealth. I'm pretty sure we're close enough.
Multiple books, maybe. I don't know, godfather of financial writing, financial blogs, financial commentary, all of it, right? Like, you've been a big fan. All of us are big fans. Been big fans ever since he started the Reformed Broker way back when. I think one of the first blogs I remember reading, along with Barry Ritholtz's blog as well. So, we'll be talking to him next week. That'll be so awesome.
Yeah, he's in Omaha. You and I are flying to Omaha for a team event. Everything just kind of worked out. Although there is some, it's not really bad news, but kind of bad news for the diehard listeners. Because when Josh is in Omaha, we're in Omaha, we're going to release this podcast a day later than normal. Normally, this comes out Wednesday morning because of everything with Josh. Just note, if you go Wednesday morning and don't see it, don't panic. Don't worry. It's going to be better than ever. It'll just be about 24 hours later, unless we can maybe really push forward on Wednesday night. I'm not predicting that though, but hopefully Thursday morning, just a day later, is how everything should work out. All right,
we have a good run even after that, right? We have one with Josh, and then we're back to talking about elections after 2 weeks from now, because it'll be only 1 week for the election. We're talking to Libby Cantrell from PIMCO, one of our. She may be the most. She must be her fourth time.
Fourth time. That's probably outside of you and I.
we got to send her a mug or something.
I don't know.
She probably doesn't need coffee mugs, but
no. But that's true. So Libby's coming up, and then we can announce this now. I mean, we're doing a live stream on Halloween. That'll be probably a replay of this very podcast, but you'll want to listen to it live. You can follow it wherever you get your social media from Sonu and myself. We're going to pump that out a lot. Joined by Neil Dutta and Skanda. I never quite know Skanda's Skanda. See, there's a Sonu, there's a Skanda, there's a Madonna. There's just a one name, but we saw who are the two best macro minds we know. Well, Neil and Skanda are right at the top of the list. And an easy day to remember is Halloween. So we're going to do that Halloween. More details to come. Just kind of pencil that in probably sometime mid to late morning with Skanda and Neil. It'll be awesome for a live stream. All right, Sonu. So let's get into it. We'll kind of push back on the election stuff or hold it back a second because I don't think either of us want to talk about it too much. Yeah. See, did you hear that ding? I just heard a ding in my ear. Did you hear it? You didn't hear it?
I didn't hear that.
Good. So I just had a team. So this is first world problems. So we've got, we use Teams here. I have Teams on Do Not Disturb. And I just got a ding. I just got a ding in my ear.
That happened to me last time. So I just closed Teams all around.
Okay. Well, I don't care about the ding on my end as long as you didn't hear it and the listeners didn't hear it. So, but still, you think Do Not Disturb is like don't ding in my ear. Anyway, whatever.
There's a lot going on.
Totally lost focus now. But yeah, we'll talk about the election here in a little bit. We'll start with kind of inflation, last week's inflation, and a little bit about the stock market. And obviously, just the continuing to make new highs, 46 all-time highs. The time we're talking right now, we'll see what happens. But the inflation data last week, I think, Sonu, I'll set it up and turn it to you. So CPI and PPI, they told us both were a little bit hotter. At least CPI, the consumer level of inflation, was a little bit hotter. Obviously, market took in stride because we hit new highs, and Friday was a big rally.
Markets are like whatever.
Yeah, it feels like that's why I was going to joke. Like, remember a year ago, every day we just talked about CPI. It was huge swings, huge moves. Now it's like it came in a little hotter, and the market didn't care. I think that's great. But what's your take there?
No, things have normalized, right? And it's normal to get numbers like this, even in a low or like normal inflationary regime. Like even I was looking at numbers from January 2017 to February 2020, so pre-pandemic.
That sounds really exciting, by the way.
And yeah, it is. Yeah, for me. But look, inflation averaged 2.1% during that time. CPI inflation, I should say, consumer price index.
Okay.
And we saw, like, out of that, 18 out of 36 months had readings about 0.2%. And that's the same reading we got in September, right? Yes, core inflation is a little elevated, but you have weird things always happening. I mean, this time it's airfares, next time it's, something else. But the good news is, look, big picture, as I said, inflation's normalized. Last 3 months, headline inflation's running at 2.1%. Last 6 months, headline inflation is running at 1.6%. And by the way, without having to spend half an hour talking about shelter inflation again.
Yeah. I was going to ask you.
Shelter is still keeping things elevated, but the good news is we got good news on shelter. Shelter pulled back a lot. You and I have been talking about how we've been expecting this for, goodness, a year and a half now, or even longer since we started the podcast. But it's happening. It just happened really slowly. But that's going to pull inflation lower. Remember, shelter makes up 44% of that core CPI basket. So core CPI looks elevated. It's running about 3%, but that's almost entirely because of shelter inflation. And shelter inflation is not reflecting what's actually happening in real time right now.
Right.
It's reflecting what happened in 2021 and 2022. Right? So that's not, the inflation problem's over. What more can I say?
We've been saying that. We don't need to beat a dead horse, but shelter was up only 0.2%. It feels like every month it's 0.5, 0.5, 0.5. So that was better than expected. What else do I have here? OER, owner's equivalent rent, which is 34% of core CPI, was up 3.4% annualized. So your work said pre-COVID was 3.6%. Yeah. So, hey, that's pretty good. And then rents, which make up about 10% of core CPI, that's how we get to that 44% of total shelter, was about a 4.1% annualized versus 3.2% pre-COVID. But then you look at the private data, Zillow, apartment list, there's probably some others. Those are the two big ones. So it's like negative year over year for a very long time. So again, shelter is last year's problem. That's not the way to say it. Inflation
shelter may also be last year's
problem. Maybe. Inflation is last year's problem. So that's the consumer. Anything on the PPI, the producer level, which came out on Friday, you want to point out before we move forward?
We came out. So essentially, PPI is important. I mean, I don't want to minimize the importance of the prices businesses pay as for the goods that they you use to make stuff, but PPI was where it matters, at least for our purposes. Some of the inputs go into PCE inflation, which is what the Fed focuses on, as opposed to CPI. Shelter impacts PCE inflation less because shelter makes up only about 17% of core PCE. So because of that, all these other factors have a bigger weight, right? Whether it's used cars, new cars, whatever, right? Medical services. But we saw that airfares are slightly on the harder side. Medical care was on the harder side. So PCE inflation for September is going to come in slightly hot.
Okay.
But on the other hand, see, this is the thing, right? Like, that's normal. That can happen. But we're getting into the Q4 era, beginning October, November, December. Remember all those seasonality issues we talked about in January, or like when core PCE came in hot, and you and I are like, okay, that's the seasonality. That's what we call residual seasonality. It's the opposite in Q4. Q4, we see seasonality pulling stuff lower. So we could see, core inflation going forward, not for September, on the lower side. But I think it's still going to come back to the labor market, right? The labor market's going to be impacted by, the two hurricanes we had.
Yep.
Right? There's a certain risk that we could see a negative payroll number in November. for October payrolls. I mean,
Okay.
I think we look past that because it could be impacted by hurricanes or whatnot. But still, that's going to spook markets, and in that sense, it's going to be bad news is good news because it's like, oh wait, the Fed maybe still has to cut, right? This inflation data is, I think, pushing people to think, oh wait a minute, we may not have a landing. The Fed doesn't have to cut so many times. I mean, I think markets are still pricing 25 basis points of cuts, 0.25% in November, and again in December, right?
Right.
If I could see a scenario where the inflation data for September sort of spooks the Fed a little bit. I mean, Halloween's coming too. And they're like, wait a minute, maybe we don't have to cut in November and December. But then if we get weaker employment data, I think they just go for it.
Okay. No, that makes sense. And as we've joked before,
I don't know if that made any sense.
My head exploded a little bit. No, it did. It did. The day to the election, obviously, 3 weeks from today, we're recording this. Okay. The very next day is a Fed meeting. So we said if there's ever been a time the Fed could just do something wild, like maybe Jerome Powell shows up not wearing a shirt or something at the press conference, nobody will care. Nobody will notice because we'll all be probably we're going to talk about the election. I'm not even sure we're going to have the results on Wednesday. I can't wait to get your opinion of that, Sonu. But we did see initial claims on Thursday last week spike 33,000 to 258,000, the highest number in a year. And again, Bespoke, I think we quote our buddies at Bespoke every week on this. They had a really cool chart of all 50 states, and it showed like where were the claims coming from. Well, not surprisingly, it was a direct path of the hurricane. Again, thoughts to everyone has been so impacted by, well, really both hurricanes, but obviously the first
North
hurricane
Carolina,
that went through.
Georgia, Florida now,
Tennessee. I mean, so that's where all of the initial the spike in claims. But so again, we don't need to keep talking about this, but you think there's you're telling me there's a chance, so Lloyd Christmas, that we could have negative jobs in October? I hadn't heard that one yet. I mean, there's possibly. Okay.
Yeah.
Okay.
Because remember, like the tolerance around this stuff, right? The confidence interval is about 130,000 jobs.
Okay.
And if you're averaging around 150, 180,
gotcha.
And then you think, okay, it's impacted by hurricanes. So that could be, maybe it's 100,000. But then there's noise, right? That now the noise could take it the other. We could get 200,000, right? But we could also get 0.
Got it.
Or slightly negative. So there is a chance. I'm not expecting that. I'm just saying, I think there's maybe, I'll just put a number, 25% chance of that happening.
Okay. All right. Well, I did see one final thing on inflation. I did see the Social Security COLA. I believe that's the cost of living adjustment. I'm pretty sure that's what COLA stands for. 2.5%. That's the lowest since 21. Again, I remember back at the start of 23, you were saying, listen, one thing nobody's talking about, there was a big jump in the cost of living back at the start of 23. I forget the exact number, but people all of a sudden are getting more money. So now we're back to 2.5%. That's probably about inflation-ish. That's normal. Another sign of back to normal, right? Anything else you want to add to that?
No, I think 2.5. Yes, it's low, but if you take out shelter, like most Social Security recipients, I imagine, own a home, and most of them probably, a lot of them, I shouldn't say most of them, a lot of them probably don't even have a mortgage. So you take that out, headline CPI, because you have to keep food and gas in there because old people eat and a lot of them drive too, right? So let's not throw food and energy out. But last 3 months, headline CPI excluding shelter running at 0.7% annualized pace. Last 12 months, 1.1%.
Wow.
Right? So this is taking out shelter. But there you go.
Okay. Well, that makes sense. All right. So let's go forward then. Let's talk about we'll talk about the stock market, but you helped the economy last week. Your twins had a birthday, right? You survived. You survived the week-long celebration. You made it, I guess.
I think it's all like I have 4 chins now with all the cake I'm eating.
There you go.
Yes, you survived. They had one of those big party places. We're not doing it. Last year we did it at home. I'm like, we're not doing this again.
Yes.
28 kids. Because
my
kids are in separate classes, right? But of course, we're doing this only once a year, and so it's fine, I suppose. And it's called Kids Empire. So it's got slides, and you could probably picture it in your head. If anyone who has kids can probably picture the scene. But it was nice because all the adults could just sit aside, and there's only one entrance, so they can't go out.
They can't get
They're
out.
All on one side. It's all padded and there's slides and all sorts of things. So they had a blast. And, we had fun too. I can't deny that.
It's like Kids Empire. Then underneath that, where we're going to take all your money. That's their tagline. I can just imagine. But you sometimes do pay not to mess your house up. I hear you. And my son Gus, he had a similar thing last month. He had a birthday, and a kid. I don't know if the word is escaped or got lost, but a kid was missing. The whole place, lights, because it's the same thing. There's only one entrance, right? Or one exit, one entrance. Like, but I think eventually they found the kid. The kid was playing in the balls in the back or something. But the whole place, like, lights are going off. I'm like, what in the world? Like, a kid's gone. Like, how did a kid get out? Like, there's a door. He's not supposed to.
I mean, I shouldn't laugh. It's scary.
Well, they
in the
found
moment,
him.
But
I'm pretty sure he was just there somewhere.
How old is he?
I have no idea. It wasn't in our group. I have no idea.
Okay.
No. Oh, no, it wasn't in our group. No.
Right, because Gus is like, what, he's 12
Gus is 12. No, I wouldn't. Yeah, he's 12. But I mean, again, one of them could be goofing off somewhere, and who knows? But yeah, I've seen that before. Well, happy birthday.
Yeah, happy birthday to your crew as well. You have a bunch of birthdays.
Yeah, our anniversary was yesterday. 18 years.
Congratulations. Wow.
Yeah, we didn't do too much because we celebrated the 20th year of kind of dating a couple months ago. That's kind of like 20 is a bigger deal. So yesterday we really didn't. Well, it was Columbus Day. My kids were on fall break. Boys had sports. We didn't really do too much in terms of the anniversary, but I guess we celebrated the 20 years of dating more so a couple months ago. But anyway, then
I saw the picture of you in a tux, and I was like, wow, the Ryan Detrick.
It was a long time ago. That's 18 years ago. I don't know if I ever wore a tux since. I don't know. I've been in some weddings. I've been in my brother's wedding and stuff. Anyway, whatever. Yeah, I'm not a big fan of tuxes and ties anymore. So
we're all past that.
Yeah,
thankfully.
Yes. All right, so what we're not past is this bull market, I guess, like that segue. Yeah. At the time we're doing this, S&P has 46 all-time highs. Sonu, continuing to, we've hit like all-time highs in every month except for the ones that start with A, kind of easy to remember. April, August, it hit all-time highs. All the rest of the months did. But I want to ask you this. On Friday, again, we've seen a lot of strength on Thursday and Friday this year. Annualized, I don't have the exact numbers in front of me, but I'm sharing it. Annualized, those days are up like 40%. Okay, Thursday and Friday. Historically, during the best bull markets, Thursday and Friday are strong. Because I'll tell you, anyone who's lived through some bear markets the last couple decades, by Friday afternoon, the fireworks are starting because that's when the selling would start to come.
Nobody wants to hold over the weekend.
Nobody wants to hold over the weekend. But obviously in a bull market, you feel more comfortable to do that. But Friday, we saw nearly, I think it was like 89 point something, close enough for government work. 90% of all the stocks in the Russell 2000s, that's small caps, were higher on Friday. The mid caps were really, really strong as well. So a lot of breadth, a lot of participation under the surface, and we're making new highs. So what's your take, I guess, on Friday's action out of small caps there? I don't know if there's any major news, any major driver for that. Just, hey, maybe they just want to go higher because the Fed is now cutting. What do you think?
But I was going to say a word, but about time. I was going to put something in
about blank time, I think is what you meant to say. Yeah.
But look, the economy is banging out, as I've said, 3% GDP growth. Last 2 years, economic growth, real GDP growth, after accounting for inflation, 2.9%. Last year, over the last 12 months, 3%. This is through Q2. Okay. Q3, Atlanta Fed GDP now is still saying 3.1, 3.2%. Yeah. It's not going to come out exact. It could be 2.5, 2.6, but it's still strong. Right? These are massive, massive numbers. And we would expect the market to do well. Profits, are going gangbusters too. I think you've mentioned this in the past. So far, profit growth has been mostly concentrated on the large side. But going forward, it's going to be small caps and mid caps, right? We're going to see profit growth. Yeah, no, we've been waiting for the broadening for a while, and hopefully it's happening now. I don't know.
No, I think so. You look year to date, right? There's 11 sectors. Every sector is up double digits. Yeah. Yes, some are up more than others. That's how it works. Some people are like, oh, look, that group's not performing. It's like, well, you can't always have everything going up, but we really do this year. Every group is up double digits for the year so far. Financials obviously kicked off earnings season. A note from Bespoke again recently. If you look at just Friday, when a lot of the big names kicked off, Friday and Monday, the last 2 days, you've got, again, not recommendation, JP Morgan, Wells, Bank of America, Citigroup, Goldman, and Morgan Stanley. So those are some pretty big names in the financial world. Up an average of 6.7% the past 2 days, Friday and Monday. So you can talk to me about earnings and da-da-da-da. I'm an old school John Murphy guy. Message of the market. The market loved whatever those stocks had to say. We don't need to get too into the weeds of it, but the earnings were pretty good. They're positive.
On that,
Go ahead.
I think you'll appreciate. And our friend Sam Rowe will appreciate. It's almost like Walmart earnings, right?
Yes.
Good or bad? Is it good for the economy? But same thing with I was looking at the bank earnings, and a lot of them are saying, credit card spending is slowing down. And then I'm thinking, is that good for the economy or bad for the economy? Because everyone's like, oh my God, too much debt, right? What's too much debt? But I'm laughing. I can't. I can't stop myself. Sorry.
No, you can spin it. Yeah, I mean, Walmart's like the end of earnings season, so that's probably like another month or 5 weeks away. But don't worry, they're going to spin it either way. Either if it's bad, the consumer's bad. If it's strong, well, see, I told you, everybody's got to go to Walmart.
And same thing with credit card debt. It's slowing. Oh my God, the economy is going to slow. People are not spending. By the way, we are seeing credit card spending slowing in those hurricane-affected areas. No surprise, right? So that's going to impact, I think, Q4 GDP. But yeah, credit card spending has generally been slowing over the last quarter. But hey, all those people who are worried about credit card debt, maybe you don't need to be worried anymore. Because, people aren't, you're banging out 3% GDP growth, even as credit card debt is slowing. That is pretty amazing.
Yeah. And the other big worry we've talked about before, but there's gross domestic product, how much how much people are spending in the economy versus gross domestic income, GDI. And in theory, those two numbers are supposed to be about the same. For years, we were told by the perma bears that because GDI was lagging by a pretty wide margin, it meant GDP had to go down and catch up. So you push back consistently, say, well, maybe not. What if GDI has to go up to catch up with GDP? That was exactly what we saw about 3 weeks or so ago when some major revisions took place. And now the last 5 years, GDI has grown more than GDP, exploding the head of the perma bears that told us for literally a year. I mean, I can't tell how many times on Twitter I do a post and the same clowns would come out. The same clowns would say, look at GDI, look at, says, well, then you show them different things. It's not even worth talking about it because you pointed out many times some of the flaws with some of that. But hey, it is what it is. Now GDI is higher than GDP, just frustrating the people that hate apparently good news and higher stock prices. What do you want to add there?
But actually, let's talk about the good news and maybe it'll segue into the election, right?
All right.
So what we've seen around the world over the last couple of years is that almost every incumbent in there has got a thumping. Has got a thumping in their national elections. A lot of them have been voted out, like Britain's Conservatives. In France, you had elections where the incumbent party lost a lot of seats. And it doesn't matter if right, left, both ways. If you're left, you're out. If you're right, you're out, right? Same thing in India, South Korea, even South Africa, right? But the U.S., what we're going to talk about the election, it's very close. It's a very close, stable race. That doesn't mean the results will be close. I mean, a normal-sized polling error could see a blue wave, like Harris winning by a landslide. A normal-sized polling error could see Trump winning with a bigger margin than he did in 2016, right? It's just that the polls have been very stable, very tight. And that's kind of surprising because every incumbent over the last couple of years has gone through huge inflationary pressures, right? And people are like, kick the bums out, right? So which is why it's a bit of a surprise why the US election is as close as it is. And part of it, I think, has to do with the fact that the US economy has grown much better than everyone else. We just talking about both GDI and GDP telling us the same story now since the pandemic. Since 2019, the economy has grown 11%, real GDP total, right? The next highest amongst developed markets is Japan with 3%. 3% over this full period, over 5 years or 4.5 years, right? Japan's grown 3%. We're at 11%. And I think that's a big difference.
I'll jump in. I believe you mentioned the U.S. was revised higher, like 1% or so. You said that's more than Germany grew the whole 5 years. Like we were revised higher more than Germany grew. So
Germany was up like 0.3%. Over the over 4.5 years, about 0.3% growth. I mean, no wonder all the other countries are like, kick the bums out.
Yeah, well said. One more thing before we get into election stuff. We talked a lot last week about the bull market turning 2. And again, I personally like to call it a birthday. I've seen a lot of talk about anniversaries. I guess given from a guy who just had an anniversary, I don't like the word anniversary, but no, I like saying birthdays.
Wait, back up. Why don't you like the word anniversary?
I just think birthdays sound more fun. I don't know. Okay. I don't know.
So you prefer birthday to anniversary? I think
it just sounds more fun. Like you said. Do you really always eat cake on anniversary? I don't know. Not really. Do you eat cake on a birthday? Absolutely. So anyway, so I'm going to use the word birthday. If you can call it anniversary if you want. That's fine. But so this bull market's 2 years old. We hammered this a lot last week. I'm not going to say too much. This is a different angle on it that I wasn't even aware of, but I think someone actually literally quoted some of my data somewhere and pointed this out. When you make it to 2 years for a bull market, which not all bull markets do, okay? But once you get to 2 years, Sonu, going back 50 years, They how do I put this? The shortest any of them made it was 2.5 years. That was in the 70s.
Okay.
But the last 5 bull markets that made it to 2 all went to at least 5 years. We had a 6-year one in the early 80s, exactly 5 years, ending in 87. A 12-year bull market, from the late 80s into the peak in 2000, and then exactly a 5-year bull market from 2002 to 2007.
So what you're saying is this current bull market is still like a teenager,
and then an 11-year bull market actually from 2009 to 2020. So yes, I mean, listen. You don't just say, oh, I'm bullish because of that one stat. But when you lay all these different stats and figures, we call this facts versus feelings for a reason. We focus on facts, but we understand feelings matter because we work with advisors in 42 states. We manage now, I believe it's $39 billion total AUM inside the Carson world, which is awesome, all-time high. Hey, market's going up too, but hey, we'll take it, right? Feelings matter, but these facts, when you stack them on top of each other, you and I for 2 years now have been saying pretty much a similar situation or similar story. There's no recession coming, and we're in a bull market. There's lots of ways to slice and dice it, but that hasn't changed. Anything else there, Sonu? Then let's dive into the election. Anyone add on stock market earnings, anything, and then we'll go forward.
I mean, speaking of stacking things up, I mean, yes, the bull market's young, so there's more ways to go. This doesn't have to be the end. What you mentioned, the 1970s, it ended, but then there was a recession. That's why it's ended, and that's not our base case right now.
Right.
Talking about a recession, right? And then Q4, look, I'm going to pull a Ryan Detrick and say, Q4 tends to be strong, average returns, positive. 80% of the time, the average return is 4.3%. The S&P is already up 1% in October, so we are off to a good start there. So we got strong momentum as well on top of seasonality. First 8 out of 9 months positive. Median Q4 return then tends to be about 5-6% or so. So
over 6.
We got all of these things, right? To put it the way you put it, stacking up. That's good.
No, absolutely. So let's see here. So my Bengals won a game, which is impressive. I mean, I see your Bears. I know you're not a big football guy. Your Bears are actually winning some football games too.
I've noticed that.
Yeah, how about that? It's there's hope for anybody, the Bengals. And thank you to the Giants for letting the Bengals win. I'm sure we have some Giants fans out there. All right, so let's finish up talking about the election. I'll start things off with a quote because we like to use quotes around here. Will Rogers said, "I don't make jokes. I watch the government and report the facts." There you go. That's so I don't know. I mean, how do you want to start? Like, if so-and-so wins, what might happen? Or you want to talk about the polling? I don't know. We really haven't, honestly, Sonu and I don't want to talk about this, so we haven't really prepared at all. Where do you want to start?
I'll put, like, we already mentioned the polling. It's tight, right? That doesn't mean the actual results will be close. It could be close, right? But it could be far off if you have a polling error and a normal polling error. Polling that never gets it right. You could have a swing 3% plus 3% minus 3%, whichever way.
It'd be a big deal.
However you want to take that plus for Harris or Trump and whatever, right? But I think what the other part of it is control of Congress is also important. I think it's especially important this time. And that's because we have a big fiscal event in 2025. The Trump Tax Cuts and Jobs Act of 2017. He signed that into law when he was president. That expires on December 31st, 2025. So, and it's mostly the individual provision, There are some business tax provisions as well, which are going to expire. So if Washington does nothing, right, things expire. And think of what happens. Everyone's taxes goes up on January 1st. The first paycheck you get on January 2026, you get less. What do you think happens to household spending? So that goes down immediately. I think we can potentially move past it. It's not the end of the world. So 2026 is also a midterm election, right? I don't think anybody in Congress will want to go into 2026 and say, oh, we just raised everybody's taxes. So that's not going to happen, right? So I think, a split Congress or even a red wave or a blue wave. With a blue wave, I think, by blue wave, I should, add Harris wins the presidency, the Senate and House go to Democrats, right? I think it's very unlikely the Senate goes to Democrats, to be honest, right? I think there's probably a 70-75% chance it goes with Republicans, right? So I think the blue wave odds are probably less than a red wave, but the risk of the blue wave is corporate taxes go up, right? It used to be 35% after the TCJA, Tax Cut and Jobs Act. It reduced to 21%, and Harris has talked about raising it to 28%. Even in a blue wave, I don't think it happens, to be honest, because it is a risk. I don't think the probability is zero, but again, I think the odds are really low. because you probably have one or two centrist senators who will be like, no, I can't go with that. I don't want to raise taxes on businesses, right? And then with the red wave, I think the risk is like tariffs, right? And not that the president needs Congress to put tariffs. I mean, Trump did the tariffs all by himself in 2017, 2018.
True.
We got the trade war. We got investment spending pulling down as a result. I mean, markets did okay, though. The market rallied in 2019. Yes, the Fed was also cutting. I mean, 2018 was a rough year. I think the S&P 500 is down 4%. But 2019 was a big year. And that was despite, the trade war and all of it, right? Yes, investment spending went down. That's not ideal, especially from the perspective of productivity. But yeah, I think with the red wave, the risk is tariffs, right? But again, I think the market moves past this. The big thing is we've written about this. I think we've talked about this on our election thing, deficit spending, right? Historically, when the economy is expanding, deficit spending actually pulls back. A lot of times the federal government goes into a surplus, right? That changed in 2017, 2018. The economy is getting stronger, but we saw big deficits. A lot of this tax cuts, but even other spending, defense spending, things like that. I think that continues over the next decade, irrespective of who's president. I think deficits go higher, but that's not necessarily, at least temporarily, I think markets take that as a positive because deficits can add to profits, right? We've written about that even in our mid-year outlook. Now, could it raise inflation? Look, if more spending by the government crowds out private investment, yes, interest rates could go up, and that's where the Fed could potentially play a role. But in 2019, you had more deficit spending, but inflation went down. Even over the last 6 quarters through the second quarter of 2024, deficits have actually been going higher, but inflation's gone down. We just talked about it, right? Over the last year, inflation outside of shelter has averaged about 1%. So inflation's pulled back. But I think that's how I'm looking at it. Temporarily, I think the big picture is deficit spending is going to rise. Amongst other things, like defense spending is going to continue going strong, right? And all of these tax cuts, not all of them, a good chunk of them are going to be renewed. And that's not a bad thing for the markets temporarily, even for the economy, to be honest. I don't think anyone wants to see taxes go up. And in fact, 2026 will be an ugly year. Midterm elections are never good for the incumbent party anyway. Right. But it's going to be really horrible if taxes have also gone up. I'll just put it that way.
No, well, exactly. So lot to unpack there.
Sorry, I went on. Yeah, I don't know.
No, it's all right. I was doing. I don't know either. It's all right. I did call it Columbus Day. In Ohio, we call it Columbus Day. I was informed that it's Indigenous People Day in some states. So this world.
I don't know. I know my kids. I know my kids are off.
I had no idea. I've always called it Columbus Day. I grew up calling it Columbus Day. I'm sorry if I offended someone, but it's Indigenous People Day or Columbus Day. So bottom line, bond market was closed on Monday. So all right, Sonu, so let's see here. Let's talk a little bit about that split Congress, because right now it is 51-49, or potential split Congress, 51-49. Democrats have the Senate 51-49. Yep. The Republicans have, I think, a 4 or 5 seat, one of the smallest in a 140-year majority in the House. It is widely assumed, and I cannot wait to get Libby on because we're going to ask her this, but it's widely assumed we probably see a flip-flop there. All right, because again, the 33 seats are up for re-election in the Senate. 23 of them are Democrats defending. So right away, it's like a harder map. That's what they say, a harder map. Some of those states were states Trump did pretty well in 2016. So you might see a flip there, but then the flip side is Democrats have a much easier path to taking back the House, it looks like. Slightly easier. So and that's only like a 4 or 5 seat majority. So you flip-flop them. Here's what I think people need to know. When you have that split Congress, the S&P 500 has been up 13 years in a row. This year is probably going to be 14 years in a row, assuming we don't have a massive S&P's up 23% for the year, so we can't make guarantees in this industry, but boy, oh boy, I hope we're not down this year. I don't think we're going to be. So, that's just one way to look at it, but again, it's those gridlock, those checks and balances. Of course, who's in the White House matters, and yes, historically, stocks have done a little bit better when you have a Democratic president versus a Republican president. But don't get too mad at me, because here's something for the other side of the people. When the Republicans have total power in Congress, stocks do actually much better than when Democrats have total power. But the reality is, again, you can slice and dice this all you want. I think gridlock, if we see that when we wake up here after the election or you get those results, whenever that might be, that tends to be something we like. You don't want too much power one way or the other, too much spending one way or the other, too much extreme measures one way or the other. You get those checks and balances. Look at what's been passed the last couple of years. Infrastructure. Well, that makes sense. Let's fix that. Yes, the Inflation Reduction Act, it wasn't really about inflation reduction. It was about chips and batteries and EVs. Oh, and by the way, the CHIPS Act, we realized when China goes on lockdown and we're up and running, we don't really like
bipartisan.
Yeah, well, we don't like that too much. We want to bring those chips home. We're going to build these factories and things here. So those are some of the things that kind of passed, and then both sides of the aisle, I believe, agree there. So let's talk about that for a second. So I kind of give you a minute there, Sonu. What's not going to change? Because let me read a quote first. I've got my quotes here. If I could find,
I have one too.
Go ahead. Yeah. We've got quotes here just to mix this up. This stuff's serious. We're trying to go ahead. You use a quote. Go ahead. Read
this
one.
This one from Churchill. Americans will always do the right thing after they've tried everything else. But this gets to the point about like checks and balances, what you were just talking about, right? No big swings one way or the other.
Mm-hmm.
Right. Even if there's a blue wave or a red wave, I don't think we get a big swing in policy because it's still going to be pretty tight.
Mm-hmm. Right. Yeah. No. Well said. Churchill also said the best argument against democracy is a 5-minute conversation with the average voter. That's another good one. So what's not going to change though? I mean, whoever wins, whatever happens, Congress. Talk to me about like defense spending. You already kind of did budget deficits, U.S. dollar. You've done some great work, Sonu, on kind of what's not going to change on the other side of this. What do you think?
3 things. Defense spending, I think, continuously rises. We got geopolitical tension. I'm a global macro strategist. I'm supposed to be pessimistic all the time. I'm supposed to tell you, what's the biggest risk? Geopolitical tension.
You're not doing very good. You've been way too optimistic. Way too optimistic. Yeah.
So that's one. Defense spending continuously goes up. I mean, it's up like 5% year over year, even this year, right? If you look at defense production, the deficits we already talked about. I think that's a theme for the next decade. I don't think it's just next 1 year or anything like that. Then the U.S. remains the largest oil producer in the world.
Yeah,
right? I think that continues. I think that's not going to change. Oil production has been, really strong. What's ironic is that, and this is where don't mix politics with investing, right? Like during the Trump years is supposed to be great for energy.
Right.
I mean, yes, oil prices went negative, all of that. We had the pandemic, but the energy sector, I mean, not a recommendation, had negative returns over the 4 years that he was president. The best performing sector over these 4 years, the Biden presidency, energy, by the way, right? And everyone's talking about, what about regulations, things like that. So anyway, all that to say, so 1, defense spending goes up. 2, the U.S. remains as the largest oil producer in the world. I think that just continues. And then 3, I think the U.S. dollar remains the strongest currency in the world. I mean, it's sort of like very, I don't want to say normal. It's always the same people saying it, like, the dollar is going to crash. China's not going to use the dollar anyway.
Exactly.
And I'm like, bring it on. If China doesn't use the U.S. dollar, that's actually not a bad thing for us because that means they're selling us less goods and we are producing more of those goods over here instead of buying it from China, right? Remember, why does China use the dollar? Because we pay them dollars for all the stuff they make.
Yeah.
Right? I'm sure half the things in my kids, return gifts, right? The gifts they give their friends when they walk away. Like half of it probably all these little tchotchkes made in China, right? Like, look, like what do we give them in return? We give them US dollars. Right. Yep. So I'm not saying we should start making all of them. Yeah, we'd like to make more things like aircrafts and automobiles, more of that over here, machines, electrical equipment, chips. You mentioned that, like they can keep the tchotchkes. I mean, no offense.
Right.
There are strategic goods, there are non-strategic goods. Right. But yeah, that's why they get the dollar. I mean, their household consumption is really low. I mean, households take a much smaller portion of national income. We're talking about GDI, right? Out of GDI national income over here, U.S. households take more than 50% as labor income. In China, that's like 25%. So household income is very low over there relative to the overall national income. And they don't have things like Social Security. They don't have Medicare, Medicaid, none of that. So their households have to save a lot, right? And because of that saving, they don't spend as much on their own goods. So what do they do with all that excess production that they have? They try to sell it to us. And we get the dollars in return. So, like, the fact that they're using the dollar, it tells you more about their economy and how that works rather than any sort of like, the dollar is going to crash. We are dependent on China. No, it's the opposite, right? So I think the dollar, anyway, stays strong because I don't think the Chinese economy is going to suddenly switch the way it works. to not selling us stuff. So anyway, those are three things I would bring up.
So great stuff there. I'll just add on the dollar. When the you-know-what hits the fan, people flock to the dollar. March of 2020, what happened? Stocks were killed, bonds were killed, even gold was killed. Go back and look it up. I know. The U.S. dollar, Sonu, was the strongest asset by far globally back in March of 2020. The first 10 months of 22, when stocks and bonds were doing terribly, that was one of the best 10-month rallies we've ever seen in the U.S. dollar. Until this change, until we have major stress. And that's something you pointed out that I will remember because you nailed this. In early August, when we had that quick 8% violent pullback because of, anybody remember this? The yen carry trade unwind. Boy, we all freaked out over the yen carry trade unwind. Looking back, how about that one? But you said, wow, look at this. The dollar's lower. Okay, the Mexican peso was soaring during a major currency disaster. So the media told us, and so many perma bears told us, and you said maybe not. And sure enough, that market bottomed very soon after. The dollar was a signal then that the worst wasn't coming. So again, we'll just keep tracking that. But I love it there. Sam Stovall, friend of our show, and there's a chance that we might get Sam hopefully this weekend because he'll be in Cincinnati with us. We're going to hope to do a Spaces with him, so we'll just grab Sam. Pull up my phone, probably Thursday or Friday, probably Thursday in all likelihood. So just follow Sonu and I on social media. If you're a friend of Sam, that'll be a fun little Spaces we'll just do off the cuff at an event we're at. But Sam said this about Congress. As the old saying goes, if the opposite of pro is con, then the opposite of progress must be Congress. That's a great one by Sam. Oldie but a goodie. Can use that forever. All right, so let's see. What do you watch? I think we've kind of done anything else on the election, Sonu? We've kind of covered a lot of bases here. I don't know. What do you think?
We can connect it to markets, and we're talking about markets. Several things stacking up, right?
Yep.
One is it's a young bull market. Q4 tends to be positive anyway. And we've got momentum coming into this. It's the best presidential election year, right, Ryan? Since like ever, since at least as of right now, the best start to a year ever for an election year. Now, what's interesting is that volatility, at least volatility is measured by something called the VIX. The VIX is actually, it's called the fear gauge, but what it actually measures is how much do options traders, options investors, think S&P 500 volatility will be over the next 30 days, right? So it's like the implied volatility taken from options prices. What is essential? And that VIX has been rising recently. And there's always, and that's again, going back to the bears, they're like, oh, see, VIX is going higher. So you can't trust these market record highs. Never mind the fact that we just got pretty amazing breadth on Friday, right? What you talked about. But what the VIX tells you is right now there's a lot of demand for options, especially put options. These are like insurance, right? You're buying insurance to protect yourself in case something happens post-election. It's no surprise. There is an election. And people have been actually buying these option hedges all the way back from the beginning of the year. So now VIX is sort of catching up to that fact because, we have something called the VIX futures. I won't get totally into it. But October volatility, October VIX is always elevated. And now we're just catching up to that. And that's essentially why we are seeing VIX going up, but it's also laying the groundwork for a post-election rally, right? So think of somebody who's, invested in the S&P 500 and they're like, you know what? I want to reduce my market exposure, right? Before the election, because I'm worried about whether Harris or Trump, whatever. So what do? They go buy a put option in the market. And by buying a put option, you're reducing your market exposure, but options are a zero-sum game. If you're reducing market exposure, somebody else is taking that exposure from you. Then that's the dealer selling you a put option. So essentially think of that like, say you buy an option that reduces the equity exposure by 50%, right? Instead of 100% equity exposure, you have 50% equity exposure. That means the dealer selling you that option now has 50%, equity exposure. But dealers usually are not in the business of making a one-sided bet, either long or short, right? So they hedge that. And the one way to hedge the positive equity exposure that they have is to short stock, right? Now, what happens after the election? A lot of these hedges come out. And because of that, dealers start to close out their short positions as well. And that tends to put upward pressure on the index. It's sort of like a short squeeze. It's not exactly a short squeeze. And doesn't mean it will happen. There has to be other catalysts, things like that. But if we see a bit of a positive upturn after the election, say the week after the election, 2 weeks after the election, I think we're off to the races, because of this, the VIX automatically falling. That's a mechanical buying of the, of equities that is going to happen in November, December, and probably into January too. So there you go. Another thing to stack up.
Yeah, best 3 months of the year, November, December, January, which we'll talk about. This could be a podcast first. I had a call from somebody. I thought it was somebody else. I answered it. So I literally just took a phone call while you were talking about the VIX there. So, we've done 105 of these. So some context around this, because a lot of people last Thursday, Friday were saying, wow, the VIX is above 20. Yet we're hitting all-time highs in the S&P, and again, kind of taking it bearishly, or maybe just kind of confused by how that's happening. So like I like to do, Sonu, went back to 1990. Why 1990? Okay. That's when we have solid VIX data. So 790 all-time highs on the S&P 500. 106 of them saw a VIX above 20. That is about 14.7% of the time. So I'm not saying it happens all the time, but it does happen. It's happened before. It'll probably happen again. Did this for fun. I took a look. The all-time high VIX, when we hit an all-time high, you want to take a guess? Like, where do you think the VIX was? The highest it's ever been on an all-time high day. You just want to take a guess?
Was it like 75, 80 or something?
Oh, no, not that high. No, 26.57. I mean, 20, because, when it gets much higher, usually in bear market.
Yeah. I was thinking about bear markets in 2008 or even COVID.
Well, obviously, we didn't hit new highs then. I mean, that's the highest. So maybe I said this incorrectly. What I was saying was the highest VIX ever when the S&P hit an all-time high. Okay. That's what I meant. Right. So, yeah. So you're right. It was like 80, 90 COVID time. And even 87, which the VIX wasn't even around, they backdated that it would have been higher. But when you hit an all-time high on the S&P, the highest VIX close, this is close ever, was 26.57 on September 2nd, 2020. Obviously coming off of the COVID times. The lowest VIX ever when you hit an all-time high, oh my goodness, can't even read my own writing. I think it's 9.64, but sub 10, we'll just say that. And this is interesting, November 3rd of 2017. So right about now in the calendar. So anyway, so just some ways to put it that, listen, it's kind of rare to hit all-time highs with the VIX above 20, but it's not super rare. And like you said, it probably shows people are getting a little bared up, getting a little cautious, getting ready for the pre-election jitters that we've been talking about. So is everybody else. Maybe we need that. Maybe we need a quick 4 to 6% pullback to really get everybody all bared up. And then the mechanics, you did a great job explaining on why, again, a strong end of year rally is still likely, which is exactly where we are, is probably the way to look at it. Just a couple things here. I mean, Donald Trump's stock, DJT, is up 83%.
Not a recommendation, by the way.
No, not right. Up 80, not at all. 83% the past month, up 50% the past 5 days. Cryptocurrencies have been strong. There's talk Trump might be better cryptocurrency. So you've got kind of that play going on. You've got the polls, you've got this, you've got that. I mean, the bottom line, I think, is this race is going to be a lot closer than probably anyone expects. Anything you want to add to that, Sonu?
I'll just say one more quote. This source unknown. This is from you, obviously. George Washington was the only president who didn't blame the previous administration.
That's another funny one. That's a funny one. So this week on Thursday, we have retail sales, industrial production, initial claims. Obviously, a ton of earnings. Anything else this week, Sonu, you want to dive into before we wrap it up?
No, I think it'll be good to get our mind off the election for once. But I'm going to be watching. I mean, it's weird because the Fed policy is really going to depend on the labor market, but we have no idea what the labor market data is going to do because it's going to be impacted by hurricanes and things like that.
Yeah, well, that's a good point. Yeah, maybe the market just give a pass, if you will, because we did on Thursday. I mean, Thursday claims soared, but we know why, right? We understand because it was literally making 4-month lows like the week or two before is where we were. So let me get I should have read this earlier. If you want to hear the latest from us, don't forget to subscribe to our podcast. You can also leave a review. We love your feedback on this podcast, wherever you get your favorite podcasts, and also on our Carson YouTube channel, Carson Group YouTube channel as well. We play these there. Sonu, I guess we'll leave with a quote because we've done a lot of quotes.
Okay.
We'll leave with this one. Groucho Marx said, it's a good one. This is from Barry on our team. Barry Gilbert pointed this one out. Politics is the art of looking for trouble, finding it everywhere, diagnosing it incorrectly, and applying the wrong remedies. So there you go. That's a good one.
You put that together with the one from Churchill saying Americans always do the right thing after they've tried everything else. Right?
Oh my goodness, exactly. So with all of that, everyone, hopefully you enjoyed this episode 105 of Carson's Facts versus Feelings. Let's talk about the election. Also, carsongroup.com/election Any election content that we've created this year, we put there. We'll continue to put things there, so feel free and check that out for more to learn about the election if you want to check it out. It is advised use only, but check it out. With all of that, everybody, thank you. Next week again, we are joined by the awesome Josh Brown, CEO, founder over at Ritholtz. And reminder, the podcast will come out a day late because of that, but it will be worth the wait. We're pretty sure of that. See everybody next week. Take care. Thank you.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.